Hey, what's up, guys? Today I wanted to share my portfolio update as well as a few things that I'm doing to prepare for a potential bear market that we might be seeing in the next 6 to 12 months. If you guys are new here, my name is Richard. I'm a yield farmer and investor. If you want to take a look at the old portfolio update video, I've made a playlist here. But basically for this video, I will share my current portfolio setup, why I am currently structured this way, as well as some lessons and mistakes that I've learned. So hopefully you could become a better DeFi investor. So we'll take a look at that, and I'll also go over my market outlook, which would kind of explain why my portfolio is positioned this way. And we'll end off this video with a few strategies that I will be implementing heading into the bear market. So right off the bat here, let's take a look at the overall portfolio trend. I like to keep track of these key metrics and measure my performance against major tokens like Ethereum, Solana, Bitcoin, as well as the US dollar value of my portfolio. In the ideal scenario, all charts would be moving up, right? But at the same time, these charts do fluctuate quite a bit depending on my strategy and the market condition at the time. And I'll share the updated version of this tracker in the description so that you can use it as well. Here you can see my portfolio has moved up a little bit in value compared to July in terms of US dollar. You can see 255K compared to 265K. And we'll dive deeper into the positions a little bit. And I'm also starting to realize more of my Ethereum profit into US dollar as well. That's why this chart might be trending downwards if Ethereum keeps moving up. And you can see I've been able to outperform Bitcoin here in the last few months, which is expected because my portfolio is pretty Ethereum heavy. I came from the ETH NFT world, so I don't hold a lot of Bitcoin to begin with. And I'm trying to basically balance my portfolio a little bit by using some of the fees that I collected to dollar cost average Bitcoin, right? But it's looking good. You can see at the beginning of the year, when the altcoin market is still pretty strong, my portfolio was actually worth like 2.17 Bitcoin, right? Last month, we broke that to 2.19. And then at the end of August, we're at 2.45 as well. So I'm filming this on September 1st in Asia. So this is really healthy, especially if I believe that altcoins are going to continue to outperform Bitcoin. I want to basically keep an eye on this and maybe realize some of my profits into Bitcoin to lock in some profits as well as some stable coins. You can see I've also moved a little bit of funds to my other wallet that I will be using for other expenses here. Just $900, nothing crazy. And because I have other income sources, I'm not going to off-ramp too much of my fees here. Even though the fees can comfortably cover my daily expenses, I want to keep growing my portfolio. Hopefully we hit 500K or even $1 million if some of my investments go really well. If not, then I'm here for the next, 10, 20 years trying to compound my gains and build up this portfolio over time, right? So I have a mix of like both long-term and shorter-term strategies. And one thing I notice is that sometimes I just take too much risk. For example, I did close some more like speculative positions like this AI XBT and Ethereum. It's an AI agent token and it's mainly a more speculative position. You can see I lost like one something Ethereum here. And I also did like an experiment on like these two positions. Clanker was doing okay, but Vader dumped much more than what I was expecting. Vader, again, is a very low cap AI agent token. They recently made a bunch of changes to like their original plan. So a lot of people sold out of their holdings. And I don't really want to keep up with too many small cap tokens. That's why I sold as well. It was meant to be more of an experiment, but you can see the experiment didn't work out well, right? I lost like 1 ETH here, but thankfully over time, I've also secured some profits. Like for example, this bonk position, I did close this position at a total 1 something ETH profit. I swapped my bonk for Athena instead. If you don't know what Athena is, the ticker is ENA. You can go ahead and do some research. And like always, none of this is meant to be financial advice, right? You guys should be diving deeper into the tokens or the coins that you invest in. Make your own financial decisions. Be responsible for your own investments. I'm just sharing with you guys what I've learned and what I'm doing to hopefully make more profits in the market and help you develop your own strategies. But basically, ENA is an exposure to a protocol called Athena. Athena has a stablecoin protocol where it's able to earn more yield by basically earning the funding rates from different perps platforms. If you guys don't know, usually the longs pays like the shorts on like these different perps platforms, right? And Athena basically manages these like delta neutral positions for you, and the yield goes to the stake USDE token. So that's Athena here. But the major shift I'm making with my portfolio is I'm basically consolidating my holdings a little bit. Pixel, I still hold a bunch of it. It's actually a big part of my portfolio, but I decided to cut a lot of the other like more speculative asset and kind of add to my DeFi positions. For example, Pendle, Athena, Syrup, and go back to betting on projects that have a more solid fundamentals. Last year in 2024, if you were good at basically betting on like the different speculations, you most likely have done really well. But this year so far has been a little bit rough for like altcoins. The win rate has been pretty low. We can see a bunch of altcoins basically underperform Ethereum here. For example, Ondo since April of 2025, right? A huge drawdown against Ethereum, or even Tau, like an AI token. I honestly haven't looked into Tau too much, but I've heard some people talking about it. You can see a huge retrace here on Tau, but this also means that it's at a great relative entry against Ethereum, right? So that's why I'm still positioned in altcoins. It doesn't make sense to be selling these altcoins now into Ethereum. And I'm already sitting in some of these positions, right? For example, Pendle to ETH. It's a newer position. I entered down here when it's at a cheap relative price to Ethereum. The risk and reward to me is worth it. Of course, altcoins are higher risk than just buying Ethereum. But if it does outperform Ethereum, that's when I can close my positions for an Ethereum profit. And one thing to keep in mind is that the way I structure my portfolio is not right for everyone, right? I'm not 30 yet, so if I'm trying to retire when I'm 65, then I still have more than 35 years to basically make good investment decisions while taking on more risk when I'm young, right? That's why I have a heavier bet on Pixel. And another thing to keep in mind is that for Pixel, my cost basis is much lower as well. I've held it from like 0.003 and now it's at 0.03, so still like 10x from like the low point that I held it from. And I've also earned a ton of fees and realized a lot of those profits along the way, right? My crypto holdings is basically free at this point. Over the last 4 years, I've made a lot of money from crypto, de-risked a lot of it. And now I'm just compounding my portfolio, still trying to make good decisions, right? Still trying to make profits. But my risk taking is probably much more aggressive than if you really need the money and you can't suffer like a 50% drawdown, right? You can see roughly like half of my portfolio is in like the higher risk assets, these like mid to small cap altcoins. And that's because again, I'm young, I have other income sources, I have other investments. And for you guys, your portfolio allocation might be completely different, right? You might be yield farming with like 80 to 90% blue chip assets like Ethereum to Bitcoin or Solana, and then only like 10 to 20% in like these large cap, mid cap, small cap altcoins. So it's entirely different. Don't just copy my portfolio, right? I never recommend like my portfolio for anybody, but the strategies that I share with you guys, like it doesn't matter which token you're buying, it works across the board, right? And the reality of investing into altcoins is that we have to be willing to basically hold through the drawdown, right? If you guys look at this chart here, I started in January with like 222K. It drew down by almost 50% to like 130K because Ethereum drew down a lot. So did a lot of altcoins. But now you can see it's setting a higher high, right? That's exactly what I want, like a higher low on my portfolio and a higher high over time. So that's what I'm currently focusing on. I'm just betting on like DeFi stuff because I understand it more and there's much more fundamentals behind it. And I do still believe that some meme coins will be back, but I don't think it's going to be as big as like 2024. We'll have to wait and see, but I believe that stuff like DeFi, real world asset, and AI tokens are probably going to do much better than meme coins. in this year or the next year. So that's the overall portfolio. Let's take a look at the market really quickly of where we are. You can see Bitcoin dominance is cracking down. If we just zoom out to the monthly chart, you can see there's like a MACD cross here, which is like a bearish signal, right? When it's on top like this. And in addition to that, you can see there was a big monthly close here that is cracking below this 20 period exponential moving average. You can see throughout this entire bull run, Bitcoin retained its dominance and basically was bouncing off of these two levels, right? The light blue is the 10 period exponential moving average, and then the dark blue is the 20 period. You can see there's a pretty big shift in momentum here. And the main thing to watch for, in my opinion, is Ethereum price action. If we look at this Ethereum dominance chart here, you can see Ethereum is moving up relative to like the other cryptos, mainly against Bitcoin. You can look at this ETH to Bitcoin chart as well. You can see Ethereum is moving up against Bitcoin. And this is a really great sign because this usually shows us that the altcoin season is beginning, right? If this cycle plays out like the previous cycles. And the US dollar chart looks great as well. Ethereum had its like biggest monthly close here. On the weekly chart, it looks a little bit more bearish, right? There's like a MACD momentum shift as well as a bearish engulfing close here. That is a bearish sign. But again, the monthly chart is bullish. The fundamentals are bullish. Institutions are buying Ethereum, right? And a lot of these institutions are not just going to buy and sell like the next month. They're not trying to capture that 10% gain. A lot of these guys are buying and staking Ethereum for like the next at least 5 to 10 years to see the growth of Ethereum, right? They're building on Ethereum, they're betting on Ethereum. So this is a really bullish tailwind. It's not just like hype driven. Last cycle is mainly like speculation driven, like NFTs and stuff like that. But this cycle is much more like fundamentals driven, stuff like finance companies trying to really adopt the crypto technology. For example, Robinhood is going to have tokenized stocks on Arbitrum, which is an Ethereum layer 2, right? So these are all like the reasons why I'm bullish and why I still hold a lot of Ethereum. My portfolio is a little bit off balance here. That's why I buy a little bit of Bitcoin every single month. You can see in August, my Bitcoin holding is only 3% of my portfolio, but I've increased my holding by roughly 6 to 7% here, right? You can see on this DCA chart here, sometimes I'm more aggressive when it comes to buying Bitcoin, depending on how much fees I earn. August was a little bit of a lower volume month for a lot of altcoins, so I didn't earn as much fees. But you can see I basically try my best to buy at least $500 worth of Bitcoin over time. And if I just keep investing into Bitcoin with the fees that I earn from yield farming, as long as I'm not taking too much risk, then I would be able to stack and accumulate more and more Bitcoin, right? So the end goal for me is to basically accumulate more Ethereum, more Bitcoin, and more stable coins. That's like what I'm trying to focus on. And I think if you guys just focus on doing that, you would do well over the next, 5 to 15 years, right? And we can look at Solana as well. Solana monthly chart looks really strong. You can see it's swinging back up. The momentum is swinging back up. It's not trading at like the overheated zone yet. And we can look at BNB as well on the monthly chart. You can see BNB is a little bit more extended here. But if we drop down to the weekly chart, what we could see is a pretty bullish price action, right? This cycle, BNB has actually been really strong. If we look at the price action here, basically this zone of resistance flipped as support at this price point, right? Roughly 750. The price went up, broke above, came back down to retest, and then now it's bouncing back up. So this type of price action is very healthy and it's very bullish for BNB. But the reason why I look at Ethereum, Solana, and BNB is because those three altcoins are major altcoins that would put a lot of pressure on this Bitcoin dominance chart, right? And when the Bitcoin dominance keeps going down, basically it means that more and more people are buying altcoins, right? And for the more cautious investors, sometimes they want to see like a confirmation of the move before they go long on the different altcoins. So that's what I'm basically positioned for and what I'm watching out for. And if dominance does swing back down here, I will be selling more and more of my altcoins more aggressively. And if you guys are providing liquidity for like Ethereum to altcoin pairs, a lot of times you're going to be sitting in Ethereum loss right now, right? Because Ethereum is very strong relative to these other altcoins. These other altcoins are not catching up to Ethereum. So we do have to be a little bit patient here. This is completely normal if you're yield farming altcoins. If you don't want to deal with a lot of these issues, then just don't invest into altcoins, right? You can see Ethereum is outperforming altcoins here by this Ethereum to others chart. Others are basically more like the large to mid cap and small cap altcoins. It excludes the top 10 altcoins. When ETH is overvalued compared to a lot of these altcoins here, it's generally a great idea to look for altcoin entries rather than close your altcoin into Ethereum. That's because when an asset is overvalued, it's not likely to keep outperforming, right? Especially for a chart that looks like this. It's not really like a trending chart. It's more like a mean reversion chart. If you guys just look at this 50-week simple moving average line, which is this purple line, or any of the moving averages here, you can see the price action basically slice through these moving averages all the time, right? So this is a mean reversion chart. And if altcoins start outperforming Ethereum once again, for example, a lot of the positions that I'm in, like Pendle and Athena, and Ethereum becomes really cheap once again, then I could close my position for an Ethereum profit and maybe realize some of those profits into Bitcoin or US dollars, right? So that's how I'm thinking about these things. And it just doesn't make sense to be selling your altcoins, even if you're sitting at a loss, especially if these altcoins have a lot of potential and high likelihood that it's going to retain its value. But basically, if this chart hits 2, it means that Ethereum is worth like twice as much as the other altcoins, not including the top 10, right? So you could see that Ethereum would be overvalued in this case. So just something to keep in mind if you guys are providing liquidity for the altcoin to Ethereum pairs. And just before I hop off here, I will be sharing some strategies as promised of what I'm doing to prepare for the bear market. The first is I'm going to keep stacking stablecoins. You can see I collected some fees here this month, roughly $2,500, and I like to chart it out on like different platforms like Figma as well. You can see I added a bunch of these fees into stablecoins. Then I lent out my stablecoin on Aave, right? So very simple strategy. I'm just adding more stablecoins to my holdings. You can see I'm only 6% into stablecoins as well. And hopefully when these like other altcoins outperform Ethereum, I can close those positions into Ethereum and realize more and more into stablecoins. I want to try to get to maybe around 50%, or if the prices are really overheated, then I'm going to shoot for roughly 70 to 75%, right? So that's the first thing. I want to keep stacking stablecoins. If the profit taking opportunity comes, then I will take it, right? You can't really force the investment. The price is not within our control. We could only plan for it and respond to the different scenarios. So if the price go up really rapidly, then I will be focusing on taking more and more profits. And as a side note, to stack more stablecoins, you guys could be, developing your skills and making sure that you're doing a good job either in your business or at your job to basically secure that income. Try to increase it if you can as well, and then keep stacking cash on the side if you don't want to invest into the market right now, right? If I look at Ethereum's price and then I zoom out, of course, Ethereum still looks like a really great investment, but at the same time, the price is not exactly cheap either, right? So I already have a big allocation to crypto. And if you guys do as well, then if you're earning extra cash, then you might as well stack it separately and deploy when the bear market comes, right? So that's the first strategy, keep stacking stables and cash. The second thing that I'm making sure that I do before this bull market ends is that I want to make sure that I keep de-risking and not dial up my risk, right? It's going to be very tempting if I look at like the dominance chart here for Bitcoin dominance. If it's cracking down to like 50%, and then I believe, okay, it might go down more, right? Let me rotate my profits to this like shiny investment. But in reality, as the prices move up, it's often a great time to secure profits rather than like doubling down on your investment. So that's the second thing I'm doing, making sure that I'm not dialing up my risk. In fact, I'm slowly selling my fees into stablecoins, into Bitcoin, into Ethereum, and to basically lower my risk over time. And the last strategy that I will be executing if Ethereum's price do get overheated to around like $8,000 to $12,000, then I will be using this bear leverage strategy. What it essentially is I'm lending out stablecoins and then I'm yield farming Ethereum into a crypto to stable pool, right? And when Ethereum basically go down, I could make a profit in Ethereum terms and then pay back my loan for a profit. I made a detailed video on this on my channel, so just search for bear lever if you're interested in like diving deeper into the strategy. But this is a great strategy to complement your other portfolio because with yield farming, we're essentially long in the market, right? It doesn't matter which tokens you pick. For example, if you're yield farming Ethereum to wrap Bitcoin, you're basically long Ethereum and wrap Bitcoin because you're holding on to them and then you're earning fees that are denominated in crypto terms, right? So to balance out our long exposure, I could be using a part of my portfolio to do this. And before you guys try this, make sure you run the numbers, know where your liquidation point is, know the pros and cons. I won't go into too much details here because this video is going to be too long. But again, you can search on my channel if you are interested in that. But I'm most likely not going to be putting 100% of my portfolio into this strategy because I don't like to short the market with 100% of my portfolio. At most, probably 50 to 75%, I still want to have long exposure in the market because I still am a longer term investor. I'm not trying to capture every swing downwards, right? So because I'm a more active investor, I do mix like mid to long-term strategies. So do keep that in mind. I don't think this strategy is going to be really great for long-term. It's only good if the prices are really overheated and you expect a big retrace coming. So I hope that video was helpful, guys. Again, I'm not always profitable. I take too much risk sometimes. I make mistakes, but that's where we learn, right? When I make good money, I share it with you guys. When I lose money, I share it with you guys. Sometimes I'm too prone to taking risks. So I'm trying to basically like kind of manage that part of my investing and hopefully we can make much more profits together. If you guys want to check out like the other videos on my channel, I talk about DeFi, investing, yield farming, all of that good stuff. So be sure to check that out if you're interested. Thank you once again for watching. I'll catch you next time.